Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So, today, we're trying to get a shook in here. So if he pops in, we'll let him go. In the meantime, I'll go through the market update, and if the shook schedule doesn't abide, then Joe is going to go through some of the sectors and Elliott wave analysis. So if shook does come, then we can postpone that to next week. So. Side note, earnings is kind of winding down. We'll plan to release the next plan and all the results June 15th. So I think that's the Wednesday there. So just kind of admin notes. I think it's the 15th. Yeah. Okay.
That's right.
All right. So let's get started. Overall market, you can see indices all in eights here still. The pie is pretty stable. I think it went down slightly from last week. So we'll get into all that. So let's look at market pulse. This is the bullish bearish here. So you can see for the percentages, last week we were 84. So 82 here. So, slight change. We did have a pretty big move down, and, we tested those limits we talked about, and we'll go into that in the charts, but, seems pretty stable up around here. We're not seeing big movements, kind of flatlining almost up here. We're getting a little bit on the bullish. Our low was 12%, so we're up at 17 overall. Nothing significant. It just seems they're obviously very wide apart here at this point. We look at the new lows, absolute flat line, since April 22nd. So for a month, you can see the new highs down here. And if I just take the lows off, you can see, we haven't gotten over 100 for pretty much a month. So that's obviously very bearish overall. We had a couple spikes, nothing, 600 is pretty good, nothing over 1,000. But you can see, I think I've talked about this many times, since pretty much the beginning of the year, which is even back here, starting kind of like November, you can see the lows have pretty much been on the opposite side of what we normally like with, like we get these new high spikes and things like that. It's been basically a changing of the guard since, and it's pretty dramatic right here. You see it shifts from all these green, spikes. We kind of leveled out here, and then we transitioned after this last big run up, all these, new low spikes, and it's been like that ever since. So obviously very bearish. And I mean, these are just, the new highs are just flat line. You can see here, we talk about flat lines with, the bearish, you can see back here after the coronavirus, the new lows is flatlined, and it's a very bullish market. So we're in the opposite right now, where the new highs are pretty much flatlining. So let's look at the state ones and eights. So I think that went up. We're at 64 then, so we're up slightly with state eights. So pretty much right now, 65%, 2/3 of the issues that we track, which is about 4,500, are in state eight, our most bearish state. So you can see down here the low for the state ones. We get down to about 8. Haven't moved much up, about 3% or so. But you can see, ever since this cross, the market up here has just, been, taking the stairs down. Normally, like a lot of the times with when it takes the elevator down, there's a big down move, we get like a V bottom and stuff like that. So this one just seems a little different than the other ones. Back here, we had pretty, like the V bottom right here back in March, but you can see how much that moved and drastically. This one has been kind of the slow walk. Just, this money coming out of the market, over like a gradual basis. It's not like a panic thing, like this one was. So, if anything, this is matching a lot what happened back in 2018, in my opinion, when they raised rates back then. We had, like a bunch of spikes here. You can see all the highs flatline basically here, and then until the Fed basically reversed course here. But you can see it's pretty much similar. So that's kind of the playbook I'm taking right now. I don't expect much to change in the market until the Fed changes. They're pretty much, I think the Fed minutes are coming out today, so that could move markets. But as long as they stick to their plan, we've talked about this for quite a long time. They're pretty much painted in a corner. They have to, like a no-win situation. They have to combat the inflation. It's the, they tried to deny it with transitory. We talked about that, being BS. So inflation's still here. I know most people are feeling it at the pump, at the grocery store. So until the Fed reverse course, that's it. It just looks like this is going to continue this type of spikes and stuff like that. Not really any good news coming out of the economy. So that's market pulse there. We'll take a look at SPX and the modeling. So you can see the low was 38.10 on Friday. So I think that was pretty much hitting the average move. We talked about that 3,800 in the charts being a key level. So obviously that bounced off of that area, that 38.10, finished quite a bit higher. So, obviously the move was met, the average move was met. Where we go from here, obviously difficult to say as far as this chart, obviously, as far as state modeling, that target 3 is going to be critical, 3672. But, I think the bigger level is that 3,800 that we've been talking about with the Fibonacci levels. So, it followed, outside of that Fed day, it's followed the typical pattern, where it runs into resistance, comes up, and then, drops down. So, from here, I talk about this a lot, 20, 30% of the time it'll get below target 3. And most of the other times it'll rebound. So odds are, as far as the modeling, that it will, rebound from here. But, everything I'm seeing as far as other charts, it's hard to say. I definitely wouldn't bet money on it rebounding right now until the Fed does something. They always say, don't fight the Fed, and the Fed is, pretty much against the market right now with raising rates and, the balance sheet runoff starting next month, in a week. So until they change their posture, it's hard to get bullish about anything, long term. So, so this may be one of those times it drops below, but we'll have to see on that. I think the more critical things to look at are, the charts we've been talking about. I'm trying to get, there's our 3,800. So you can see, it tested there. I think, where are we at right now? 39.45. So we're mid-range. I said last week that, I kind of expected this range to hold at least until June. So, another week, may test it again. Hard to say, but, the key levels for SPX, reiterated from last week are 4,200 to the upside. That's your resistance. And then the 3,800 is your support. So if anyone, if it hits if anyone traded when it got near that 3,800, you probably did well. But, I still think we got another week. And then, it's going to get real interesting starting in June, I think. So, so that's SPX. Let's look at the Russell. So Russell did went down below, met target 3. You're kind of right in between 2 and 3 right now as far as the targets. Our levels on Russell are, this is obviously a key level to watch too. If it can stay below at target 3, I think this is the more important chart other than, rather than SPX to watch, because it's like so close to target 3. So we pretty much had a close below target 3 right here, and then the next day we popped up above. We got down to, guess what, 1701. I had 1700 as our support. So it got right to that level. And obviously bounced off, pretty strong, vaulted here. And, did it again here, 1730. So this, I think, your 2 levels you want to watch, can this stay below that 1730 for the modeling purposes? That could be a good indication of the market's going to be heading lower, if it can stay below that 1730. So as far as the charts, and we have our 1700 here, tested there, 1701, kind of got around 1730, 36. So, our key levels for here are the 1900 on the upside. And then, your support is at the 1700 here. So my expectation is, another week in this range. I think June's going to be super interesting. That's kind of the expectation right now. But I would say, obviously those levels you keep harping on are important. The 1731 would be something I'd be watching, tracking on a daily basis if it gets down there. So you can see it closed once, popped up, tested, and then pretty much tested again. So, it's providing really strong support. So if that breaks, then I think that's like an indication things are heading lower. So that's what I would be looking for, kind of a key metric there. What else we have? 10-year has dropped quite a bit. I know we don't have the 10-year, but this one has dropped significantly. What that tells me is it's kind of like a fear-based trade. When the rates drop that much, it's kind of like they're running to treasuries. So that means money's coming in. So it's kind of like a fear-based trade. So, we talk about when the rates get over 4, it's going to be real bad for the market. But, obviously quite a ways from there. We did have that high of 1312, which pretty much match, right around back in 18. I think it got up to like 320 something. This is like a monthly chart on it. But we did get up to 312, which kind of, in the neighborhood of where that was back in 18, right before the fall, the big fall. That would be, obviously keep your eye on this. but it's dropped quite a bit. So, over 4 is real bad for stocks. So we're not close to that right now, but it's going to be, as these Fed meetings come out, I think it's going to be something to watch too, how the market reacts. And if they're no longer buying assets, this is what you're going to be wanting to watch. Basically, I think they're going to still be buying assets up until June. So, June 1st. So I think that, that's going to be what we're going to, keep a close eye on this stuff. The bid is disappearing for, mortgage-backed securities and things like that. So let's take a look at the Fed Minutes Seders tool that he found. I think it's just baked in 50-point hike, June 15th, 89%, 50-point rate hike. I think it's a little higher than last week. It's gone up marginally. So that's what you can expect from the Fed in a couple of weeks. And then, going forward, obviously you can look at that. But I think right now it's kind of baked in for 50-point hikes. Not sure how high the expectation is down the road. But right now, I think at least the next 2 meetings, especially this one, I think it's already baked in, unless we hear something else from the Fed that, we're going to get a 50-point hike. The other thing, this one, TLT. So if you want to play the, as far as like symbols, and I don't think Shook's in here right now.
Not yet, Josh.
Okay, so I'll go a little more here. TLT, this is like a 20+ year treasury holding. So all the maturities are 20 years or more. So this one, as you can see, since beginning of the year, January 11th, it entered at 143. It's at 118 right now. So you can see on average, this thing dropped like 2.5%, like very minimal. But right now we're at like 17% down on this. You can see as the rates go up, this goes down the most because of what's called duration risk. So the further out the bond is, the more it reacts to changes in interest rates. So this one, if rates continue higher and higher, this one will continue to get, killed. I'm not sure if people are familiar with that, but it's definitely something that I track. It's kind of like it'll move in inverse to the 10-year for the most part. So, so that was it as far as markets. So I'll open up to questions and comments. Differing opinions? Anyone bullish out there?
Josh, on the last one, the TLT.
Yeah.
Can you bring up TBT? I think that's kind of almost an inverse play, isn't it?
Forget this one.
I don't know if you can do a compare on there.
Yeah, I think this is the inverse of the TLT.
I think they have a correlation, an inverse correlation.
Yeah, ultra short.
If you can, yeah.
Yeah. Yeah, so you can see, this went in February, like a month later. It says ultra, so I think it might be 2 times. Yeah, that would be 2 times the TLT move.
Yeah.
Pull up that. I don't mess with the leveraged ones much. Liquidity is pretty tough on those usually. Like the spreads are like pretty ugly. Yeah, so this one in, and you can see state 1. So this will move inverse to TLT. So this was where TLT went into state one. So it was, 18 bucks. Now it's gone up $8 since then. So pretty big move. But this one will move more because you can see like, this one's averaging like 3% here and this one does 2.5. So it's kind of like twice the move. Although this move, started earlier, but it's down 17. This one's up 29, is entered a month later. But yeah, I mean, that's the way that play rising rates. If you think rates are going to continue higher and higher.
Yeah.
This would be a way to, because on this one you can go long, with bull call spreads or whatever. This one, obviously, you're going to have to, you're betting it's going down. So, buying puts, bear calls, things like that. So it might be easier to execute, the bullish trades here, like selling, puts and stuff like that.
Yeah. Yeah.
Versus the other one. But I've just watched liquidity on these ultra and 3 times. Some of them have quite a bit of volume, but the spreads are usually pretty wide from what I've messed around with like Nugget before, and it's like 3 times gold miners or something. And it's just, they're pretty wide. So obviously, just go in and try and get mid price if you're going to do it. The more contracts, like if you're doing 2 different strikes, like with the spread, it's just going to be, it just gets harder and harder to get anywhere near mid price. They're really wide. So that's the only thing I'd caution about that. But yeah, this one, I mean, you could buy the stock, it's 19 bucks or 24 now, but buy the actual symbol, it's pretty cheap. It might be an easier play, as long as, just be careful, like the Fed comes out and, they reverse course, this thing will tank.
Yeah.
So I don't expect that in the near term, but I'm definitely guarding against that, later in the summer, if things get real ugly, that the Fed would reverse course, drop rates, start buying again, all that stuff to prop everything up. Did you have other questions on this?
No, that's it. Thank you.
Okay. All right. Anyone else? Questions, comments? Thanks, Dan.
Josh, I had just a question. I know Sedir has mentioned the IYT in the past. We don't have that in the database.
Right.
Do you have one that you look at, for the transports?
Oh, in the system? No, I mean, you can go with like a bellwether or something like that, like FedEx or UPS maybe.
Right.
Yeah. If we pull up I do like IYT. Like when I was a broker, that was kind of one of the key ones I tracked. Yeah.
One of these days,
UPS is 16% Union Pacific. So I'd go with UPS over Union Pacific. I know Union Pacific's got hit recently. Yeah, I would go with UPS to kind of track it. But you can see here, bounced off support. The modeling comes in handy a lot. So, I mean, it's not right all the time, but I mean, sometimes it's just like right on. I mean, target 3, 165.18, and it got to 165.34, and then, surged. Yeah, that's kind of the conduit I'd use until we get IYT.
Right. Okay, thanks.
I think we pulled up that monthly chart on that too, right? Yeah.
Yeah.
Just crossed. Just crossed in April. Huge move down too. Yeah. So, the other ones, obviously, if I think XLU, I told you the only two sectors that have been good. Yeah, I think XLU, what's the 1 week performance on that? Yeah, it's up $2, almost $3. Yeah, that's the only two areas, if you're bullish. Look at that. It's nice to be right once in a while, right? Uh, Yeah, so, okay, well, if there's no other questions, Sadir, you agree with everything here?
Yeah, I mean, it's pretty bearish, and I don't have any counter arguments to be bullish. It's
Yeah.
pretty bearish out there, and we'll see what the Fed says here at in the afternoon when they come out with their minutes, what the reaction is.
Yeah. Well, I think the market's like pre-programmed to anything the Fed says. It's like bullish, and then like the next day they read it and they're like, oh, wait. It's like, oh, we
Yeah.
thought,
Oh, now that we actually read
yeah, we
something,
actually read it. This isn't good. Like, we messed up. We're just on autopilot. They have to like reprogram their algorithms.
right?
So,
I keep some people keep saying there's going to be a bear market counter-cyclical rally of 5 to 10%, but every day it tries to do that. We had an update a few days ago, I can't remember,
yeah,
and it just fails like crazy the next day.
yeah. Well, we had that like 2 weeks back in, I think it was March on SPX that, we weren't expecting.
You're
That
right.
was-
2 weeks it went up almost like 8-9%, but that was the
Yeah.
last counter trend rally.
Yeah. I have to go to like a daily chart here. This one right here. So March 14th, this was like the counter trend. It's like, since then, it's just been, ugly. That was Fed Day there. I mean, it's just been ugly. Yeah, I don't see anything good. Yeah, I think it'll be tough to break this range. That's why I gave it like some time. I wouldn't expect it to break for another week or so, but yeah, obviously things can happen. I know I got monkeypox out there now, whatever that is. So
I saw Jeremy Siegel, who's a professor at Wharton Business College, I believe. He's on CNBC a lot. I saw him this morning. And he made the comment, I haven't seen this data or anything because the Fed said they weren't going to taper until June. But he said he saw data that we had the largest drop in money supply, the largest drop in like 20 years over the last week.
yeah,
And I'm not sure what data he was referring to, but I kind of caught it in passing, but his point was he thinks the Fed might be being over aggressive, and they haven't even started the quantitative tightening that I know of.
no, not that I know of. Yeah, I wish, like I try and go into that Fed site, but it's just like a total maze, to find anything useful. So, I just kind of rely on some other sources who like go into there and know where to go, that I listen to. But yeah, I wish I could pull up, like a daily balance sheet somehow, to see. I think that's definitely something key to watch, but as far as I know, it's June, when all that, the tapering ends. But up until then, I would expect they're still buying,
Yeah, that's my understanding.
So, okay, well, good point. Okay, anyone else?
I could pull up a few charts, Josh, if you want.
Yeah, okay. I'll give you the floor here.
Let's see. Here, and again, nice job on the analysis, Josh. I think as you said, those the 3,800 level in the SPY and the 1,700 in Russell are key. If from a retracement standpoint, the and the SPY, if we were to drop to the next level, that would be another 300 points in the SPY or the SPX. So just, with that perspective, the next level down is 300 points there, and it's about 170, 175 points in the Russell. So, significant levels. The Russell, that would be taking us all the way down to the 5A618 retracement. SPY at 3,500 would just be 50%. So see what the future holds. No real magic in this SPY chart. You can see that all right?
Yep.
Okay. We talked about the 5-wave down. That's kind of, coming out of the April high. Let me see. Just let me make a couple marks on here. I think everybody's pretty clear. We basically from the top here, you got A here, you got B here, and then you got C here. All right. We were earlier, I was counting, 5 down, 1, 2, 3, 4, 5, but now we're into 7 and change. So, and A and C were not exactly symmetrical. So, we'll just see. But if we're to break the 3,800 level, chances are we'll be heading towards 3,500. Let's see, Russell. Actually, sorry about that. Let me clear this stuff. Russell, no real magic either with that ABC that we've been talking about, holding 1,700. But there are a couple charts. XLE you talked about. I think, if we're looking for maybe a trend reversal, the only thing I would say about the XLE chart, obviously positive as heck, but you do have an ascending triangle there if you throw in a couple trend lines. So just something to keep an eye on. I mean, if we seem to get a bid in the market, maybe we'll get a reversal in XLE, and that ascending triangle may be a forerunner of that. The utility you talked about, in terms of being strength, no real magic there. I mean, obviously 70 is a support level, but just and that goes back just to give a perspective to the COVID lows. Just solid stock or index there, and then I was going into some of the different sectors, and so this one did catch my eye, and I went a little deeper, and it made sense to me. But this is the communication sector, and again, these charts are going back to the March COVID lows. What really caught my eye here, so this is Google, Facebook, Comcast, kind of stocks like that. But what caught my eye was the fact that, damn, this thing, topped out ahead of everything else, last September. And as you see, going back to those March 20 lows, we're all the way down to the 5/8 retracement. Now, when I went a little low or a little deeper into it, this thing, and I don't know if it was the case then, but I'll guess, the components in this thing, 23% is Facebook. Yeah. Next is Google, about 11, 12%. So that certainly was part of the issue because, as it turns out, Facebook did, top out it wasn't when it had its dramatic fall, but it did top out in the third quarter of 2021. But given that this is a 5/8 retracement, given that it was ahead of the market, I would definitely watch that. And you can see, the natural support, in this 5/8 retracement level in the mid-50s. You go back to, the September 20 pullback lows. I would be watching this kind of closely for a hint as to maybe the next move in the market. So that's XLC. XLY, consumer discretionaries. I kind of think, when I did the retracement numbers manually, I came a little closer to the 5/8 retracement than I did with these bars. But here's another one. And, if we're looking for hints as to the next move, I'd have my eye on both of these, the XLC and the XLY. XLY, as it turns out, from that high in the fourth quarter of 2021 to the low in March, there's your A leg down, you get the B leg up and then the C leg down. A and C are symmetrical, not that that's necessarily magic, but coupled with the 5/8 retracement, again, I view it as pretty important maybe in terms of what lies ahead. So they're kind of the two I wanted to bring to light, the XLY and the XLC. A couple of the others, just from a longer term perspective, real estate has its fingers in, so many different parts of the economy. And as you and I discussed at one point fairly recently, Josh, this, the XLRE is kind of a hybrid. It's not all the home builders by any chance. There are different REITs in there and,
Right.
different components. But, we are at a 3/8 retracement similar to SPY. So maybe worth keeping an eye on too. Finance is finance. We've gotten to a 3/8 retracement off the big move there. XLP, not the consumer staple, that got crushed in the last little while. That was last little while being the last week and a half. That was kind of remarkably strong, as you pointed out, for a while. Not quite down to that retracement level. And, the last one, the industrials have been pretty high, but just a downward trend. Another one, I think, just to kind of keep an eye on to see whether that downward trend continues. So, just a couple of different charts to look at, with those retracement levels. I think going back to those COVID lows are always worth keeping an eye on. So,
Yeah, I agree. Yeah, when I was doing that weekly, the monthly analysis on those last week, XLC and XLY had his, potentially bottoming area. But hard to say, it's definitely something to watch, those two. They pretty much led the market down. I agree with that. So, I think it's a good thing to kind of keep your eye on those. It's good charts though.
I can give it back to you, but there you are.
Okay. I don't like. Do we think a shook's coming, Joe?
I just checked. I didn't see them. So I think one of these days.
Yeah.
That would be my guess.
Yeah, I don't think it's been 40 minutes, so I think we can count them out. I didn't have anything else. I'll open up to just general questions, about the platform, anything in general.
I actually, and I'll just speak up for a second, Josh. Does anybody have any? Clearly everything's bearish. Any thoughts on why the market would turn bullish? Anybody? I got a couple ideas, but I think they're far-fetched. Do we have
It'll
any
turn
shot?
bullish if the Fed says they're done. If the Fed says, hey, we've decided that we've gone far enough, we're not going to do, the market will skyrocket. If they say they're going to take those rate hikes off the table. But I don't think that's going to happen. I think that would be the only thing that would turn it bullish.
Yeah, I think that I agree with you, Sidir. Highly unlikely. I don't see it happening. But if you get enough companies, with some positive forward looks instead of just throwing up their hands, I think that, could be a catalyst. But I wouldn't think we got a shot at that until sometime in the fall.
Well, you've had a lot of bad news lately. Snap cratered. Dick's Sporting Goods had Target issued weak guidance. Dick's Sporting Goods just did. there's who else announced? Facebook announced their freeze on hiring. A bunch of other people, Robinhood said they were laying off people. So there's a lot of these kind of with regard to guidance or hiring or layoff, a lot of this news starting to come out. So you might think that the Fed says, well, maybe we've gone far enough. I don't think it's going to happen at least through June, but if more and more of that sort of data starts to mount through June, I could see it. I think we're going to get one more for sure, but if more companies start saying that we're going to have to stop hiring and we're going to have to lay off people, then the Fed might stop raising rates.
Yeah,
Could be.
yeah. There's not enough pain out there yet. But I mean, if you think about it, like they say like 70% of our economy is driven by consumers. Who's getting hit the most? The consumers, record credit card debt, eggs at least doubled in price. Like everything at the grocery store is more expensive. I mean, that's, we drive the economy, the consumers, and like we have less to spend, because of this inflation. So it just ripples throughout the economy, That's why the Fed's in a no-win situation here right now. But I think, there'd have to be quite a bit more pain before, they reverse course or some kind of event, like another pandemic or something.
Josh, when you mention groceries,
Mhm.
I hear a lot that there's going to be a food shortage, and it's based roughly on Ukraine's production of wheat and barley and sunflower seeds, et cetera, but they can't get it to market. And, a lot of their fields have been bombed and mined and stuff like that. So I don't know the schedule for that to have an effect. But if you think food prices are high now, what I'm hearing
Mhm.
is they're going to go real high later this summer,
Yeah.
and then fuel with it.
Yeah, I've heard that also. Like wheat's gonna, I don't know. Yeah, I think I'm not like a commodities expert, but I think the wheat planting, like they start getting reports during the summer. So I think I think part of it's Ukraine, but the other part, like is the fertilizer. So like a lot of fertilizer comes out of Ukraine. And like I've just heard like strange stories where like Union Pacific like is limiting how much like potash or whatever it's called, fertilizer, like they can ship at a time. So I think, if we don't have the fertilizer, then the crop yields are going to be way down. So that's just wheat. But a lot of animals get fed off wheat type stuff. So if we don't have the fertilizer, then all the crop yields are going to be, a lot less than normal. So that'll just cascade throughout. So I think that's the biggest driver is the fertilizer from what I've understood. And
Yes, and I also hear that Russia is a big producer of
Mhm.
fertilizer.
Yeah.
People have a problem with Russia right
I don't know why. They're nice guys, right?
now. Yeah.
Yeah. Yeah. Yeah. The whole Ukraine situation, like I'm not on either side, obviously. Ukraine is so corrupt. And I'm not I don't think we get straight reporting. Obviously invading another country is not good, but I'm just neutral. I'm Switzerland on that whole thing. I don't trust anything I hear about it. But I trust, reports about food and stuff like that from other sources. So, yeah, I think it's going to be a real thing. Yeah, but I'm not sure. And I think, they release crop reports and stuff. So that may be when things really take off, if the yields are significantly lower than what is expected, that could really, cause prices to go up.
I heard on the evening news yesterday that Ukraine is sitting on 20 tons of grain. I don't know what, it didn't say what grain. I assume it's mostly wheat. That it cannot move because the Russians have blockaded the ports. So they've got 20 tons of grain that they just can't sell.
Yeah, can't get out of there, huh?
Yeah, can't move it.
Well, hopefully they have enough to eat then. Yeah, I mean, I don't think we import Ukrainian wheat, but I know a lot of third world countries do. Like if you look at like Sri Lanka, like there's this mass chaos there because there's no food. So I'm not sure if that's going to really start,
I don't think we
So-
import that much wheat from Ukraine, but the rest of Europe and Northern Africa and that area does, and that's what I'm reading is would be affected with food shortages because most of that grain is, used in that area, obviously, right? And
yeah,
the people who are closest to it are the normal customers for Ukrainian agricultural products.
yeah, I don't think I mean, obviously the price will affect us, but I don't think we're worried about, US wise, like importing grain. I think the bigger thing to watch is the crop yields, based off of the lack of fertilizer. Yeah, and that would affect across the board stuff. Like I've heard anecdotes about, like the costs of fertilizer has gone up like 6-fold or something. It was like $200 to do an acre. Now it's like over 1,000. So, per acre. So I don't know. Well, I'm not sure how it's going to play out. I'm not too up on the farming. I just hear what I hear. So it's good discussion now. Thanks for the comments, Lee and Sadir. Anyone else before we close it up here? No? Anyone? Okay, well, we'll finish it up. Apologize, the ship obviously had stuff come up, but yeah, we're trying to get them back in here. One of these times we will succeed, so. Until then, thanks for tuning in and we'll see you next week. So thank you all.
Josh, bye, everybody.
Thanks. Good meeting.